Private equity investing is a strategy that involves buying and selling stakes in private companies, often with the aim of improving their performance and profitability. Private equity investing can offer higher returns than public markets, but also involves higher risks and fees. The Alaska Permanent Fund is one of the largest and most active investors in private equity, with about $15 billion of private equity assets as of March. The fund has invested in hundreds of private equity funds and companies, ranging from well-known names like Airbnb and Uber to niche sectors like biotechnology and renewable energy. The fund's private equity portfolio has generated an annualized return of 16.6% over the past 5 years, outperforming its benchmark by 8.4%. This has contributed to the growth and diversification of the fund, which provides annual dividends to Alaska residents and supports state spending. However, private equity investing also poses some challenges and opportunities for the fund and for Alaska. Some of these are: liquidity. Private equity investments are illiquid, meaning they cannot be easily sold or converted to cash. This can limit the fund's ability to respond to market changes or cash needs. The fund has recently reduced its target allocation to private equity from 19% to 15% by fiscal year 2025, citing liquidity and valuation concerns. Valuation. Private equity investments are difficult to value, as they are not traded on public markets and rely on estimates and assumptions. This can create uncertainty and volatility in the fund's performance and reporting. The fund has adopted a new valuation policy that aims to improve the consistency and transparency of its private equity valuations. Fees. Private equity investments are expensive, as they involve paying management fees and performance fees, also known as carried interest, to the private equity managers. These fees can reduce the net returns for the fund and its beneficiaries. The fund has negotiated lower fees with some of its private equity managers, saving about $200 million over the past 5 years. Alignment. Private equity investments require alignment of interests and expectations between the fund and the private equity managers. This can be challenging, as they may have different objectives, time horizons, risk appetites, and governance standards. The fund has established a code of conduct and a responsible investment policy that guide its private equity relationships. Impact. Private equity investments can have positive or negative impacts on the economy, society, and environment of Alaska and beyond. These impacts can affect the reputation and sustainability of the fund and its investments. The fund has developed an impact framework that measures and reports on the social and environmental outcomes of its private equity portfolio. In summary, private equity investing is a complex and dynamic activity that offers both rewards and risks for the Alaska Permanent Fund and for Alaska. The fund has demonstrated its ability to navigate these challenges and opportunities with skill and prudence, while seeking to maximize its returns and benefits for Alaskans.